Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Lumina Gold Corporation. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Scott Hicks, Vice President of Corporate Development and Communications at Lumina Gold Corporation, which trades on the OTCQB venture market under the symbol LMGDF and on the TSXV under the symbol LUM. Welcome, Scott.
Yeah, thanks, Bob. Appreciate the opportunity to present here. It's been a pretty eventful year for our company, and we haven't done this in a while. So hopefully, there's some new listeners here today, and happy to introduce some people to the story. So, I'll be making some forward-looking statements today, and this is a presentation that's available on our website, so you're welcome to read that forward-looking statement in more detail. Today, I'm going to walk you through Lumina Gold and the Cangrejos project, which is in southwest Ecuador. So this is a very large gold and copper project. Right now, as it stands, we have about 12 million ounces of gold reserves. And between all categories of resource, we have about 20 million ounces of gold in the ground. So this makes the asset the 26th largest gold asset in the world at any stage of development, production or development right now. So it is truly, a globally significant asset. This year, we released our PFS, and as you can see on this page, just some quick highlights. About 370,000 ounces a year of gold production, about 40 million pounds of copper production. So if you put it into gold equivalent terms, it's about, just a shade under 500,000 ounces of gold equivalent production. It's an extremely long life mine asset, or mine life. It's a 26-year mine life. It's got a very low cost profile, so about $670 an ounce after deducting the copper byproduct credit. And the valuation at 1650 gold and 375 copper, which is what we used in our PFS study, is about $2.2 billion. If you were to increase commodity prices by 20%, it goes to about $3.5 billion. So you can obviously see it's got a lot of torque to move in metal prices. This year, we also, on the back of the PFS, announced a funding agreement with Wheaton Precious Metals, which I'll walk you guys through in more detail. It's about a $300 million stream, and $50 million of that is pre-construction. That's what's funding the company right now, and $250 is for construction purposes. So just on the corporate overview here, where do we sit today? We're about $150 million Canadian market cap. Probably one of the cheapest gold developers in the space, if not the cheapest gold developer in the space on kind of any metric you look at, whether it's ounces in the ground or price to net asset value. Part of that, I think, is Ecuador, and I'll talk about the country here in a little bit. Part of it is, I think, it's a large project and requires a lot of CapEx to build it. But, we think this is an interesting entry point for people because we have done a lot to de-risk the project since we started on it in 2014. Right now, our largest shareholder is the founder of what we call the Lumina Group. It's our management team, and his name is Ross Beatty. So he founded Pan American Silver and Equinox Gold. He owns 21% of the company. He also has a $15 million Canadian convertible note out with the company that he plans to convert at 42 cents Canadian before the end of the year. Right now, cash-wise, we have just a bit over 10 million at the last financials, and that's money from Wheaton Precious Metals. As I explained, we're using that to drill right now and advance the project towards a feasibility study. So Ecuador, since we moved into the country in 2014, the country really has continued to improve. We've seen two large mines come into production. One is currently actually under an expansion and an extra $700 million of investment. That would be Mirador, that's operated by a couple Chinese companies. And Fruta del Norte has continued to exceed expectations. So this has basically taken the exports for mining in the country and increased them by 10x since 2018 to present. So now mining is the third largest export in the country. Currently, there's an election there right now. The The second round of the election is on October 15th. We expect either candidate who wins to be a pro-mining candidate and continue to advance the industry. So, we view this as a great emerging jurisdiction and one that will continue to improve and enhance mining for years to come. So Cangrejos, we're down in southwest Ecuador. This used to be a Newmont project. We've drilled, roughly 100,000 meters since then. It's a great project in the sense that it has excellent access to infrastructure. So we've got an airport there. We've got power, mostly hydroelectric in the area. We've got water for the project. There's no communities directly on the deposit. This is not a high elevation deposit. It's only about 1,300 meters of elevation. So it's really the best infrastructure you could have for a project in the Andes that's this scale and a large porphyry. The other key element here is we're close to the port of Bolivar, which is where Mirador is shipping their copper concentrate out of. So being 40 kilometers from where we would ship our product is also a huge cost advantage. So how we position this asset right now, as I said, it's the 26th largest gold asset in the world. It is a lower grade gold and copper asset. We think of this more like a copper porphyry, and it would certainly be in line with a lot of the projects that have been built recently in the copper space. But it's hard to benchmark it to smaller gold projects because it is more of a large scale operation that's more about efficiency. One thing that makes the project work is an excellent strip ratio. So for those of you who aren't familiar, that's kind of how much waste you need to move to get at a ton of ore. In our case, it's 1.3. That would be, an industry-leading strip ratio on the deposit. There's also cheap power, cheap diesel, and great access to infrastructure, and all of those kind of help the economics of the project. The capex to build this is a shade under $1 billion US. And that would be, in and around the two projects that have been built in country so far. Stage, we just announced the PFS and we're marching towards a feasibility study, which we expect in the first quarter of 2025. So the project is really two open pits, Cangrejos and Gran Bestia. It's open in a lot of directions still. We don't plan to do any further exploration or step-out drilling at this point, but for an eventual operator or acquirer, I think that's interesting to add ounces at the project. Basically, you could see here in the cross section the two pits. So the blue outline is the resource pit shell. The red outline on the two pits is the mine plan. Right now, we're drilling 20,000 meters to support a feasibility study. So we're drilling the first 3 years of the mine plan off Cangrejos to take it from probable confidence in the reserve to proven. And then we're doing geotechnical and metallurgical drilling for further study as well. So all that will support the feasibility study for Q1 2025. This is the reserves here. So just a little over 600 million tons come into the mine plan, which is, less than half the tonnage of the resource at the project. Basically, it's about 0.55 on the gold and 0.1 on the copper life of mine. It's a bit higher grade in the earlier years, which I'll show you, but this is the life of mine grade averages for the mine plan. Metallurgy and recoveries, just for people, the two products that are coming out of here are going to be a copper concentrate with a high gold value and then a gold silver doré. So most of the gold reports to the copper con, but about 7% of the recovery does come out in a doré at the mine site. And as I said, from a shipping perspective, the copper concentrate, we're so close to the port that's already set up and already shipping copper concentrate. So a big advantage here. And this is a fairly conventional flow sheet. So nothing too exotic here. So a lot of numbers on this page summarizing the PFS, but I'll try to focus you on a couple. Basically, with the initial capital, we were able to keep the capital flat between the 2020 study and the 2023 study. And the main way we did that is by phasing the project with one extra step. So basically, we start at 30,000 tons a day, go to 60,000 tons a day, and then eventually 80,000 tons a day. Once you do that first expansion in year 4, up to 60,000, you basically produce at almost 500,000 ounces of gold equivalent for the rest of the mine life, as you can see in the top left there. The grade in the early years is between about 0.9 and 0.95 gold equivalent, and then the life of mine average is about 0.71. So you can see the returns of the project and the MPVs that I've already been through there. This is an extremely valuable project that will produce for, over basically 3 decades in our view. So the Wheaton Precious Metal Stream, we streamed 6.6% of our gold production at the project in exchange for $300 million. This is a very attractive cost of capital and a great way to fund the company. The $50 million is, or call it, well, I'm rounding, $48 million is coming in pre-construction. That'll fund the feasibility study, the G&A, and some surface rights acquisitions for the project. The 252 comes in and funds 25% of the initial capex for the project. What does it do to the returns of the project? Well, it reduces the MPV in the model by about 10% to about $2 billion. Then that model starts kind of after the $50 million's been spent, so it doesn't factor that into that. But so it's about a 10% reduction in the MPV. And then the IRR of the project, so the return to the builder, actually goes up because the cost of capital is very attractive from Wheaton. So it actually goes up about 1.5% on the IRR. So just quickly talking through the site plan, you've got 2 open pits, a primary crusher built between them, a processing plant up on the ridge, and a waste rock storage facility. We're very lucky in the sense that this material is not acid generating, so it's good for the tailings and the waste rock storage from that perspective. On the next slide here, you can see we've elected to go with dry stack tailings. We think this is a big plus for permitting the project. This is, a safer and certainly more, call it permitting friendly approach to tailings. This is great from a water recycling perspective, and we think it'll really be beneficial for the project. It's the way the industry is going, especially with larger projects. But we think this is the way forward for the project. So from an ESG perspective, the project is very friendly in a bunch of different respects. It's got low transportation costs. It's got obviously, copper as a main product, which will be key for the electrification of the economy. We're using predominantly hydropower here in this area to support the operations. We did use diesel trucks in the last study. We'll look at electric as part of the feasibility study and see what that looks like from an economic point of view. As I mentioned, it's non-acid generating rock, so it's good for long-term storage. We have excellent social acceptance in the community. We hire a large number of our employees and workers out of the community right now, and we'd expect that support to continue as we look to build the project. So the project timeline right now, we just finished the drilling in 2022 to support the PFS. We've now finished the PFS study, which came out in April last year. The 3 work streams we're working on right now that are key are the investment protection agreement with the government of Ecuador. So this has been done by 3 other companies now. It's a pretty well-beaten path. And we'll be looking to negotiate the terms. And really what that does is it sets your tax rates and your royalties for the project. The tax rates are really well established in the country, so it's really the royalty that will need to be negotiated. We're also concurrently working on the feasibility study. So as I said, we're drilling 20,000 meters right now to support that. And we expect the drilling to be done by the end of this year, and we expect the study at the start of 2025. We're also concurrently working on the permitting. So if everything goes according to plan, this project will be shovel ready at some time in 2025, and that would allow for the 2.5-year construction period to start. So production in kind of, you could imagine late 2027, 2028 type timeline. So the project, it's pretty unique in scale. This is every project out there that can produce over 250,000 ounces of gold. It's a primary gold project. You can see we're the 5th largest. It's held by an independent, which is the yellow bars there. The blue bars are held by majors or mid-tier producers. The tick marks are projects that are being constructed right now. So, we think we're in the right part of the curve here where you're offering scale, but not, too much capex in exchange for that scale of production. And projects in this part of the curve are getting built right now. So we do get asked this question a lot. What about the grade of the project? It seems like it's a lower grade project. So as I mentioned earlier, it's got a very low strip ratio. And the reason that's important is it speaks to operating costs. So you can see on the right-hand chart here, these are all the kind of gold peer projects that are open pit milling projects. So that's the set you want to compare it to. You can see in that set we're the lowest grade. If you take the grade and divide it by the strip ratio, so adjusting for how much waste you need to move, we go on the left-hand chart from the bottom of the set to the second best in the set. So this isn't the whole picture. I mean, there's processing costs obviously as well, but this really emphasizes why this project works, because the mining costs are so much lower than some of the peer projects, just sheerly on the amount of material we need to move to get at a ton of ore. So, for investors looking at this today that aren't in the story, or investors that are thinking about adding to the story, if you go back to 2017, when we had a 4 million ounce resource in the ground, no economic studies, and compare it to our market cap today, our market cap's about 20% lower. So, during that time, we've obviously done 3 economic studies. We've taken the resource from 4 million ounces to 20 million ounces. Gold's up 62% and copper's up 40% during that time. So, we think this is a tremendous value opportunity for people to buy in at a cheaper overall valuation. And again, not share price, market cap. So cheaper valuation for the whole project. After all this de-risking, and after we put in $300 million of financing to support the project that's non-dilutive to shareholders. So I'd encourage people to take a close look at this at these valuation levels. On the community, we do run a lot of comprehensive programs. A lot of our focus is around health, community well-being, jobs, and reforestation in the environment. I think the job we've done here is what's given us our social license to operate, and we're continuing to expand these programs. So in summary, we've taken this project from no resource in 2014 to 20 million ounces. We've done 3 economic studies. We've proved that this is a viable, valuable project in the global context. Our team, we have a track record of selling companies. We've sold 8 companies since the team was established. The business plan here is to look to find a larger company to buy this project. In the event we're unsuccessful with that, we do have the capability and skill set to build it ourselves. But the business plan of the Lumina Group and Lumina Gold is really to de-risk these large projects and look to sell it to a buyer at the right time. So maybe with that, I'll pause and I'll look here to see if there's any questions. Can you provide some more detail on the timing of the gold stream from Wheaton? Sure. So basically from the May announcement over the 12-month period, there's 3 tranches. That's $37 million of capital coming in. So our next draw is in November this year. And then the third draw is in May. The extra money, the $11 million on top of that makes up the $48 million of pre-construction capital, can be drawn on at any time for infrastructure purposes and land surface rate purchases to support the project. What are the catalysts for a revaluation of Lumina? That's a really good question. Obviously, we think the PFS was a good start to that. It's traded down a bit since then. I think perhaps the Wheaton stream that we announced, obviously indicated we weren't selling the company immediately. So perhaps there was some selling on the back of that. I think, getting the terms for the investment protection agreement with the government is a big de-risking step. I think people in the last several months have been focused on the Ecuador election, which has affected all the Ecuador names, not just ourselves. So I think a resolution of that, and like I said, we expect both candidates to be pro-mining, but I think just having more clarity on that for people will help all the mining companies in the country, not just ourselves. And just continuing to hit milestones around the feasibility study, and that hopefully that leads to a revaluation. Obviously, gold's been extremely soft here in the last month as well. So, we'd expect that if for some reason we do hit a little bit of an economic wall in the US and Canada, and the Fed needs to reverse rates, that's going to be quite positive for gold. And I think it'll be a different tide. The other thing, in the industry, we just haven't seen a lot of M&A this year, and I think you need that to return to kind of bring back some of these valuations to junior developers in general. Again, not necessarily a us specific thing, but that's kind of across the whole sector. Any capital needs to support your 2024 programs? So our capital needs are being funded by the money coming in from Wheaton. When we did the deal with them, we'd kind of budgeted approximately $35 million US to get the feasibility done. So through 2023, 2024, and into early 2025. And about, roughly $15 million for land acquisition. So we're working on that now, and we don't anticipate raising equity anytime in the near term. The only shares that'll be issued is when Ross Beatty converts his $15 million convertible at 42 cents Canadian, and that should happen before the end of the year here. And that'll take him up over 25% ownership in the company. He's obviously been a big supporter as the founder of the Lumina Group and is continuing to support the company pushing this forward. So I think that's all the questions we had. Maybe I'll just wait one sec to see if any others come in. But I don't see any more questions here. If you do want to book a one-on-one meeting, feel free to reach out. And I really appreciate everybody taking the time to listen today and hear the story. We're excited about what we've achieved this year so far, and we think mining in Ecuador is really going in the right direction. And this is a unique and exciting project. I encourage you to take a look, and you can always reach out to us if you have more questions. So with that, let's end it there. And